good evening, everybody. This is Josh Pape with Citizens Bank of Edmond. I'm joining you here from my home office on Sunday evening, March 29th, here in Edmond, Oklahoma. I wanted to take a few minutes to talk about SBA programs and the CARES Act. The CARES Act passed and was signed into law on Friday. I spent the better part of the weekend, more time than I care to admit, pouring through the CARES Act. Specifically 4 sections of that act that I think are the most pertinent, and so I thought it'd be a good investment of time to sit down, talk for a few minutes about what I know, or at least what I think I know, about the existing SBA programs and the new SBA programs being implemented with that act. These opinions and interpretations are that of my own. These are not Citizens Bank of Edmond's official interpretations or opinions, or any organization's opinions or interpretations for that matter. I'm not a CPA or attorney, so I would advise you to read this information on your own and seek the advice of your CPA and your attorney if you think you need to, or you need additional clarity. But I'm going to do my best to unpack what I think I know at this point about these existing programs and the new programs. So let's start off with the disaster loan. There's been a lot of talk about the SBA Disaster Loan. What is it? Well, the SBA Disaster Loan Assistance Program has been around for a while, and there's a few loan programs underneath it. The most pertinent to COVID-19, at least here in Oklahoma, is the Economic Injury Disaster Loan, the EIDL. That's how I'll refer to it throughout the course of this video. What's important to know about the EIDL is you do not apply for this loan through a bank. You apply for this loan directly through the SBA at disasterloan.sba.gov. If you go to a bank and want to apply for this loan, they will not be able to help you out. This loan is processed, funded, and again applied for directly through the SBA. A few key features of this program are there's a $2 million loan maximum. Loan amounts above $25,000 will require that any available assets of the business be pledged as collateral. Now, loans won't be declined due to a collateral shortage if there's not equity in those assets, but any available assets have to be pledged as collateral on the loan. The loan features a pretty low interest rate, I believe 3.75%. It can be amortized over a 30-year period from my understanding. Again, apply directly with the SBA and seek their counsel on it. One enhancement that, as a part of the CARES Act to the EIDL program, is the establishment of an EIDL emergency grant in Section 1110 of the CARES Act, which basically states that any applicant of the EIDL can request that an advance of up to $10,000 be done after their application, and it be funded within 3 business days. And whether you are subsequently approved for the EIDL loan or not, that $10,000 does not have to be paid back. So it is a grant. We'll talk a little bit more how that might impact other SBA programs, but that is an enhancement of that program as a part of the CARES Act. SBA Express Bridge Loan Program. How is this related? Well, this is not a new program, but it is related to the disaster program a bit, or at least applicants to that program, in the sense that borrowers can apply for this program through a bank. This program is originated through banks. Borrowers can apply with their existing bank as a way to bridge the gap between when they get their disaster loan or expected disaster loan funds and their need for working capital now. So while they're waiting on their disaster loan application to be approved or processed or decisioned, they can go to their bank and apply for up to $25,000. That's the maximum loan amount, to get some working capital right now. This program is originated by your bank. Banks can only originate this loan for borrowers that they have an existing business relationship with. So in the case of Citizens Bank of Edmond, someone who came to us that has no account or no loan, we would not be able to originate this loan for them. Reason being is it's a fairly efficient process, and the SBA is reliant upon our existing knowledge of borrowers to be able to make very quick decisions. So far as I can tell, the process is similar or exactly the same as any other SBA Express loan, so there are required forms and things that have to be packaged in an organized manner, and although the lender does not have to wait on SBA authority to originate, they are always going to make sure that they follow protocol to protect that guarantee. What happens if you apply for the EIDL, the disaster loan, you don't get approved, but you took out the SBA Express Bridge Loan? Well, if that were to be the case, the loan would convert into a 7-year loan with a maximum interest rate applied of 6.5% above Wall Street Journal Prime. Now your rate may be less. That's just the maximum that a lender can charge. But a lender can require that if you're approved for the EIDL loan, that those funds be used to pay this loan off. Again, this is a bridge loan. It's meant to be short term. So if you're approved for the EIDL, lender can require, and probably will, that those loan funds be used to pay off the SBA Express Bridge loan. If you're not approved, then they would term it out over the course of probably 7 years. Lenders can charge an application fee of $250 or 2%, whichever is higher. And again, so far as I can tell, the CARES Act had no impact on this program at all, and the same SBA Express procedure and protocol applies to this loan as any other. So now for the big discussion, the CARES Act. What did it do for SBA loan programs? Well, it did quite a bit. There's 4 main sections I want to talk about as quickly as I can. Section 1102, 1106, 1110, and 1112. So Section 1102 establishes the Paycheck Protection Program, the PPP. This loan is applied for through banks. It can be actually, the Act establishes that a lot of different credit houses or lenders can originate this loan, not only banks. Still waiting for some more clarity on that, but essentially you're going to go to a bank, you're going to apply for this loan, and they're going to issue funds. The maximum loan amount on the PPP is 2.5 times your average monthly payroll cost, generally looking a look back over the last 12 months in most cases. So when you go to inquire about this program, or as soon as you watch this, start gathering your payroll costs over the last 12 months from right now, or at the time you apply, because 2.5% or 2.5 times your average monthly payroll cost will be your maximum loan amount. There is an overall cap of $10 million, so businesses that had a average monthly payroll cost of $4 million would be eligible for that $10 million cap. Allowable uses of the loan proceeds are things like payroll, obviously, healthcare, benefits, rent, utilities, interest expense on mortgage obligations, interest expense on debt service obligations that you incurred prior to the CARES Act. Payroll will be, again, one of the bigger probably uses, and that will feed into loan forgiveness that we'll talk about here in a little bit. But those are the eligible uses. So the maximum loan amount is based upon your payroll cost, but eligible uses of the proceeds expand beyond payroll. These loans are non-recourse by the SBA so long as you use the loan right and you use the funds from the loan correctly. There's no recourse. We expect this to be a very short application. Banks right now do not know what that application looks like. We don't know administratively how this program works. We know it's the law and it's in the Act. We just are awaiting guidance by the SBA on how to execute this program. So be patient with your bank. If on Monday morning they cannot, whip out an application for you to fill out and issue you a check. We just simply don't have the knowledge yet on exactly how the program works. We know the framework, we know the policy, right? But we just don't know the procedure yet. There's going to be no collateral required on these loans, no personal guarantee on these loans, so very liberal in terms of the equity stake on part of on the borrower, the principals of businesses. We'll talk about loan forgiveness in a minute. There is a loan forgiveness feature. Any portion that isn't ultimately forgiven has a 10-year maturity of the debt and a 4% interest rate, so very cost effective. These loans feature a 6-month principal and interest payment deferral. So from the time of origination, there will be no payment due for 6 months at all. So that is a key feature of this. So that'll really help with your cash flow during this time. The SBA is going to pay lenders that originate these loans a fee based upon the size of the loan. They will pay these lenders a fee with a loan forgiveness feature and a lower interest rate. That's probably helped there to help cover some of the lenders' costs involved in originating this loan. So a big question that I've seen and some misinformation I've seen out there is about, if I applied for the disaster loan, can I still apply for the PPP? And how does that work? Well, there's a portion of Section 1102 in the CARES Act titled Duplication. And basically what it says is recipients of the EIDL disaster loan are not excluded from the PPP. However, the use of the proceeds, whatever you receive the loan proceeds for on the EIDL, cannot be used for the same purpose on the PPP. So I think that's probably going to eliminate a lot of people from receiving both of these loans. However, there's not just an overlay or a rule that says if you apply and receive funds from the EIDL, you can't apply for the PPP. Just the use of proceeds cannot commingle or duplicate. The other thing that Section 1102 does beyond the PPP, but unrelated to the PPP, is it expands the existing SBA Express program, which provides a 50% guarantee to banks that originate that loan. Currently, or before the CARES Act, there was a $350,000 maximum loan amount that has been increased to $1 million. And so that is something as a part of Section 1102 that was done unrelated to the PPP, but an enhancement of an existing SBA program. So far as I can tell, there's no increase on the guarantee on that. Maybe that'll change, but I don't see anything in the CARES Act related to that. Let's talk about loan forgiveness of the PPP. Let's back up to the PPP, but in the context of the loan forgiveness feature, which is covered in Section 1106. This one is really important to read, as a lot of people are going to be wanting to seek that loan forgiveness. What it states basically is that 8 weeks worth of certain expenses, eligible expenses such as payroll benefits, rent, interest expense on debt service obligations, 8 weeks worth of those expenses from the time you originate the loan can be forgiven on your PPP loan. The forgiveness cannot exceed the principal balance of the loan. So in other words, if you take out a $10,000 PPP loan and 8 weeks worth of all those eligible expenses was $12,000, you're not going to get some sort of proactive credit of $2,000 beyond the loan forgiveness. Your $10,000 loan would be forgiven in that case, and you'd move on. If the total of all those expenses over the course of 8 weeks were $8,000 and you had a $10,000 loan, there'd be a $2,000 deficiency there, right? That would not be forgiven. On that $2,000, if we back up to the terms of the PPP program, there'd be a maximum of a 10-year maturity and a 4% interest rate on those funds once payments kicked in. So that is something to pay attention to. The main driver of loan forgiveness is keeping people employed. There's going to be a calculation of FTE, full-time equivalents, during the covered period of this program. And so if you aren't keeping people employed throughout the course of this covered period, your forgiveness can be discounted or even done away with. So I would really encourage you to read Section 1106 in great detail. You will apply for that loan forgiveness with the lender that issued the loan. They will have 60 days to decision that. The lender is going to need all the documentation about how you used the loan and all of your employment records showing how many people you had employed, how many FTE you had employed during that time. So be prepared to document everything you do with that loan and everything about your keeping people employed while you have that loan, because that will be key for that lender to be able to grant forgiveness on the loan or not. So that's the loan forgiveness in a nutshell. There's a ton of information about it. So let's move on though. Section 1110 of the CARES Act. Section 1110 establishes emergency EIDL grants. So EIDL, backing up to the disaster loan, right? We already talked about how you would be under this rule, you can request an advance of up to $10,000 within 3 business days. Again, whether you're subsequently approved for the disaster loan, the EIDL, or not, you do not have to pay back that $10,000. Here's how the EIDL grant and the PPP come into play. We already talked about duplication of being able to apply, but let's say you apply for the EIDL, you're declined, but you took the $10,000 grant. Then you apply for the PPP, you're approved, and you go through the process and you apply for loan forgiveness. Whatever amount you received under the EIDL grant, you would not, that amount would, your forgiveness on the PPP would be reduced by that amount. So if you had a PPP loan for $20,000, you received a $10,000 EIDL grant, you would not be eligible for $10,000 of that $20,000 loan over here to be forgiven, since you got a grant, basically free money over here on this program. So that's how those things work together. The last thing I'll talk about is Section 1112, subsidy of certain loan payments. The gist of this one is fairly simple, is that for borrowers who had existing SBA loans pre-CARES Act, pre-COVID-19, pre-crisis, pre-all this stuff, right? Borrowers who had an existing SBA loan, most 7A loans from what I can gather, the SBA is going to pay 6 months of principal and interest payments on most of those loans that already exist. So you are going to be relieved of your debt service obligation for 6 months. Again, waiting on SBA guidance on exactly how that works, how the bank's going to work with the SBA to get those principal and interest payments from them and not you. But that is a key feature of the CARES Act covered in Section 1112. It appears to exclude the PPP program. Clearly, that one already has a 6-month deferral feature, so there'd be no need for the SBA to pay 6 months principal and interest on it because those payments are deferred and ultimately, possibly, probably forgiven. But subsidy of certain loan payments does address existing SBA loans and the SBA covering 6 months worth of principal and interest on those payments. So that's it in a nutshell. There's a ton. I could probably spend hours talking about these programs. I would encourage you to research and read, get the right information. I've seen a lot of summaries out there, some really good, some really bad. The U.S. Chamber has a really good visual and written representation of the PPP program and the loan forgiveness and how it would work. I would highly encourage you to go look that up for your own benefit. So I hope this was helpful. Again, these are my opinions, my interpretation. There's a lot there, and I could be missing something here or there, but I hope it was helpful. I wish you guys luck. I wish you guys prosperity. I hope you have a good week. I know this is a tough time. I know here in Oklahoma it is, and nationwide, a very tough time for business owners and small businesses. And community banks are working tirelessly around the clock trying to figure these things out so we can help our clients and help our customers and help keep businesses and families afloat during this time. So thank you guys for watching. I hope it was helpful.